Welcome to the B.F. Anderson Technical Report for August the 6th. As you can see, this NASDAQ is just on a tear. Continues to be in a very positive uptrend. You know, for an investment advisor, nothing is more difficult than a down market or a bad market. This is a good market, and so I tell my clients all the time, you know, we've got to make hay while the sun shines, because we know there's going to be difficult periods like this here. It's just inevitable. But right now, you've just got a very smooth, very positive uptrend. Hopefully it continues. Here's the weekly. Now we're going to talk a little bit about this indicator. I learned about this indicator several years ago. And time is a factor, so we'll talk more about that. But the most important thing to note here is that the 35-week moving average continues to stay in a very positive uptrend. And you can see the NASDAQ is making new highs. S&P, now let's look at the monthly graph. Now monthly graphs are important because you can get definitive signals, such as a, a golden cross or a bearish cross. So it's just understanding the possibilities and the probabilities. And the point is that if you're on a golden cross on the S&P, you're basically in a bull market, is the thinking. Now, as we go to the next graph, we're going to see here the NASDAQ on a monthly basis. You can also see that we've got the same basic pattern here, very positive. Here is China. We've gotten the golden cross, so you can kind of see where this is important. You know, we got a death cross on oil, like 6 years ago. And it's basically shown that oil's been a negative factor. You just don't want to be involved in oil. Now, here's we go to the aggression index. The aggression index is basically comparing, it's a ratio of the NASDAQ, which is mainly technology, compared to consumer staples, which are things we have to have. So it's defensive versus aggressive. So as long as this line is going up, and this moving average is moving up, it's saying that investors are willing to be aggressive. Now here we have the same ratio, but on a weekly basis, and this is really the basis of the indicator. The indicator is the lower moving average has to be going up. You can also see that the ratio itself has gone up after testing this moving average, which was the 10-week moving average. This is the 40-week moving average. Now, on just the economic indicators that we're following interest rates, which continue to just move sideways, really no activity. Oil, for the first time, is starting to perk up a little bit, nothing to write home about. Financial stocks, meaning the banks and the insurance companies, sideways is basic story there. Now on sentiment, what we're looking at here is the put-call ratio. This is where we monitor what the institutional investors are doing with their option buying or put buying or call buying. When they buy a bunch of calls, it means that they're being greedy. When they buy a bunch of puts, it means they're very fearful. But right now, we continue to stay in this greed area. Now you notice here on the VIX, which is a measurement of volatility, we've gotten below 30, which is the level that you should be at. But we're currently at a level of 23.76. We're actually lower, or just about as low, as we were before the coronavirus situation. So with low volatility, uptrending market, you're going to get extreme greed because everybody wants in on the action. We'll see. Now, here we have another important indicator, which is the S&P 500, breaking out of this basing area, starting to go towards new highs. Now here's the year-old high here. We're close. We're very close. Now on the 200-day moving average, you can see it's now starting to trend somewhat upward, and we're staying above it. Now what tends to happen here is the 200-day moving average tends to act as resistance, then it acts as support, which we've seen, a double test of that support. Now we're getting an uptrend. Very, very positive. New lows. Now this is the new lows on the New York Stock Exchange. Not really seeing a troubling amount. Anything over 40 a day tends to be a warning. So not really anything to say about that. Here we have something that I thought was interesting. The semiconductors are in everything. They're in your washing machine, they're in your refrigerator, they're in your automobile. So basically, semiconductors have become the new transportation index for the modern economy. So as you can see here, the semiconductor index, which is the VanEck Vectors Semiconductor ETF, is hitting an all-time new high. So it's just simply saying technology is very strong. This is the S&P 500. Now, what I'm doing here, as I mentioned earlier, time is a factor on the weekly indicator that we're using to measure the S&P 500. Now, this truly looks like a V bottom here in this situation. Now, is it because we have a vaccine? Is it because we have a treatment? I don't know, but here's the deal. If we look at this situation now, the number of weeks above the 35-week moving average is now 13 going on 14 weeks. The number of weeks below were 10 weeks. So let's look at some historic examples just to see if we can see some type of correlation. We're trying to determine, is this a V bottom or is this a bear market? Let's look at this one. This is the 35-week moving average going back to the low in the market in 2003. Look at how long we were below that particular moving average before we turned up. But once we turned up, we started a new bull market. Now this is 2003. Let's look at the next example. This is the S&P 500 again. This is the low in the financial crisis, 08, 09. You can see how many weeks we were below that 35-week moving average. But once we broke above it, it was a new bull market. So it's just basically saying the chances are that this has been a V bottom. All right, we're going to get into the top 5 here. Now, the first one that I'd like to mention is Advanced Micro Devices. They've recently worked on, I believe, a very big deal with Apple. Now, this is again semiconductors. We just looked at the VanEck Semiconductor ETF. You can see here, all-time new high, very positive. They are really giving Intel a run for the money. Here we have another company called Fastly, which is a company that has software that speeds up your internet. Well, look at this, broke out to all-time new high. This is a very positive sign. You should be aware of this. Here we have Novavax, very interesting situation here. They came out yesterday morning, and stated that they were having very good results with their vaccine. So you can see here, broke out to an all-time new high, basically almost 20 million shares. Company normally trades about 8 million shares. They must have something. Now, they also got a $1.6 billion injection from the federal government to start manufacturing their vaccines now. Here we have a company that's a semiconductor, another semiconductor, so you can see the pattern. This is NVIDIA, breaking out to an all-time new high, very positive pattern. Here is our old favorite, Tesla. Now, the problem I'm having with Tesla right now is it broke this 10-day moving average, and the 10-day moving average is really somewhat acting like resistance. Now, on September 22nd, they're going to have something called Battery Day. There may be a major announcement, and I will say this in terms of a 50-50 chance that there'll be a major announcement. But I'm hearing very positive things about this company. We should continue to monitor it. Very important. So that's basically it. If you have any questions, please let me know. Thank you very much.